Good morning, everybody. Dan Kautz.
Good morning, Jeff Buckley.
And here we are in the month of May. And we're ready to start off with yet another big hit of news. I mean, as we're recording this, it looks like there might be a breakthrough in Iran. And I left the office. Well, we just left our offices to come in here and do this. And we saw the market's up over 1% already, almost across the board.
Significant bounce. So.
Yeah, and we saw this before. Now, what was it, about a month ago maybe? Beginning of April, because April was such a bounce back month.
Yeah, there's been a couple fits and starts, I think. So we'll see if this holds.
That's a really good way of putting it.
Yeah, most positive development yet, I think.
So then when and if this holds, boy, the demand's going to unleash. And
I think
we'll see how things go.
Definitely.
But here's my slide again. I know you take a lot of time to put this together. I want to thank you, Jeff, for putting together the slides and getting it done. And that's why it's important that I'm quiet, because I don't want to take up too much time.
Oh, that's all right.
That's my reasoning why I stay quiet. And this is all the words I have for today. So let's get going. Here we are. We can't take any live texts or calls during the recording of this. Our contact information is dkautz@kautzbuckley.com, jbuckley@kautzbuckley.com. Our office phone number, 716-276-8480. Our ever-popular text line is 716-272-1129. So popular I couldn't remember it. And we are getting a lot of hits on our LinkedIn and Facebook and stuff, so we do appreciate that.
Yes.
And so let's take a look. How are we doing this month?
Yeah, pretty good. This is because we finished up through April. So again, we'll start with our look in the rearview mirror a little bit here, and a very good month of April. You can see there's quite a bit of pretty significant numbers here. The year to date and April. A lot of that though made up in the month of April. So just about every index that we follow out there that focus on stocks of some kind, large, medium, small, international, whatever it may be, a lot of them really had a very positive month of April. Also saw some of the breadth that we've talked about in the past, where we like to see that it's not focused just on those Magnificent Seven stocks, the high-tech stocks, but we're actually seeing investments spread out across all, in this case, the 500 stocks that make up the S&P 500, because when you're drilling down into 500 different stocks, those stocks are of companies that are located in many different sectors of our economy. The equal weight even was up about 11.1% for the month of April, and so far this year, 7.4% rate of return. So we've been doing pretty well. There's the comparison. You can take a look. March was definitely the setback month, and February, January, but we're making up for some lost ground in March. So very positive. So a couple headlines over there. Very good corporate earnings right now. March was kind of the end of the first quarter, and then in April we started to see some earnings reports, and those are spilling over now into May. They've been extremely positive right now. One of the best earnings seasons on record, where companies report their earnings for that first quarter, and they've really been doing a great job. So, yeah, this just focuses a little bit, drills down a little bit deeper just on some specific categories. And again, April, a very positive month, but you do see some trailing off. Energy, surprisingly so. Energy fell back a little bit in April, but you can see it was the leader in March. So spikes in energy when the energy shock hit from the war in Iran. Significant gains were made in companies that kind of make up that energy sector, and they did just pull back a little bit in April, but that's still been, you can still see the energy sector year to date, 2026, we're still up over 33% in just the first 4 months. So still a very positive place to be invested. But then you look, there's a number of other categories that are also doing very well too. So. Yeah, now this is just the quick look out the windshield here. Where are we right now? And again, Dan and I like to stress this, that none of our clients are invested solely in stocks. We have balanced portfolios. Some are more aggressive. Some investors are more aggressive, so they'll have a higher weighting to stocks. Yes, and that'd be that top line there, about 80% equities, 20% fixed income, whereas other investors are going to be more conservative. So they're going to fall closer to the kind of the bottom of the chart here, which is the bottom line there. 20% stocks, 80% fixed income or bonds, which are those safer, usually safer, more stable investments. So you can see the total return year to date, there is a difference there. Not a huge gap, but certainly you've been rewarded if you did take a little bit more risk there. But it really stands out if you look at that the total return of these portfolios, these model portfolios over the last 12 months. And those that are comfortable taking a little bit more risk,
Got rewarded.
yeah, there is a reward. But even the fixed income heavier portfolios are still over the last 12 months have generated a decent rate of return, and you still see that even spilling back into the 3-year returns. The 5-year returns, we're still picking up. If you go back 5 years, we've got 2022 in there. We're a little past COVID in that 5-year look back, but we still have 2022.
Interest rate issue that happened in 22.
Difficult year for both stock and bond investors.
Right.
So
It'll take another couple months before we shake that off.
yes, exactly. So
This is, we step back a little bit,
Yeah.
not as much green. But,
This-
I know you're going to go to it, but I always look at consumer spending, consumer sentiment. Consumer sentiment has actually clicked up a little.
Yeah.
And consumer spending has always stayed strong.
right.
Actions and words.
I know, and
you
we're
know?
going to talk about that a little
Yep.
bit more as we into the rest of the slides here. But something to point out, and they even highlighted. And again, let me just set the stage here. This is from Rockdale, one of the money managers that we work with, and this is their speedometers. Again, Dan and I like these because it gives you a very good visual of where things stand. But these are meant to look forward. This is looking down the road a ways as we're traveling here, so the next 6 to 9 months, and how they see things shaping up. Earnings remain very strong, and in fact, they spell it out. It's about an 18.5% gain, really, for the S&P 500. Yeah, it really is one of the best earnings seasons that we've seen, and a lot of it does seem to be motivated by spending on artificial intelligence, certainly. Mm-hmm. So, despite the troubles in the Middle East, but yeah, again, the consumer sentiment, which we're going to get into a little bit, still positive. Corporate profit growth is good. Credit demand and availability. We've still got some green on the screen, but yeah, we did fall back a little bit.
Energy market popped up.
Yes.
You remember the grayer lines is where it was last month. The darker line
right.
is where it is this month.
Yeah.
And monetary took a little step back, and U.S. economic outlook took a little step back, but a little less green than last time, but not. This isn't doom and gloom.
Definitely not. No,
It's
everything
not
is
doom
still
and
pretty
gloom,
solid right
and
now.
things are fluid. So,
Yes. So, yeah. So what we wanted to touch on, I think, then this month is in the next. If you want to
may
go,
I?
yes,
Thank
certainly. But we like to try to talk about what we also have listened to. We listen to many different money managers. They put out a lot of material for us. We read it. We listen to their presentations and everything. So we try to distill all of that down and give all of our clients through this webinar some information, which really takes a lot of that into account. And some of these slides even I've picked up through AssetMark too, which is again a big part of our practice, and they provide us with a lot of information that distills that information from multiple different money managers too. I just wanted to kind of touch on this to kind of set the stage. The U.S. economy rests on 3 pillars, and you've got it there: consumer, business, and government. But if you look, the outsized, the biggest, by far, the biggest part of our economy is based on consumer spending. So that's something to keep in the back of your minds. That's extremely important. As long as we, as a nation, are out there spending, our economy responds very favorably and stays very strong. And it's a huge percentage of overall. And this just shows the chart to the right here, I guess, shows the contribution to the gross domestic product over the last 2 years of the growth. And it's, again, primarily consumer spending. Trade has even fallen back a little bit, but we do have government spending, we do have business spending, but again, the consumer is driving that economy. So keep that in mind as we go through some of these next couple slides. This is just a couple points to focus on. U.S. consumer sentiment fell. Now, first off, what is that? Consumer sentiment is, there's a poll that's taken on a monthly basis. It comes out of, I think,
Siena, I thought.
Well, there's a Siena poll. There's also the University of Michigan survey. Yeah. I don't really like to mention the University of Michigan,
Well,
but
it's, you know,
we got to
blue,
state the
I
facts.
gotta tell you.
Yeah. So anyway, but yeah, the U.S. consumer sentiment is a measurement of, during this survey, how do those of us, the average consumers in the economy, how do we feel about everything? Our savings rate, the price of gasoline. The surveys are really pretty comprehensive. And this is important to note. U.S. consumer sentiment fell to a record low. So it's not just a low. This truly is a record low, less than 50 in April, reflecting a broad pessimism across income, age, and political groups. So it does, again, these surveys are pretty broad. And when you look at just about any category out there, our sentiment is pulling back. We're a little pessimistic right now. Actually, I shouldn't say a little, a lot. It's a record low. Rising inflation concerns and economic uncertainty drove the decline, with expectations of future conditions and personal finances weakening significantly. People are concerned that this is going to persist for an extended period of time. Inflation, if we're all spending more money on gasoline, we have a lot less money then to spend on other discretionary items, even groceries, everything. Yes, so it definitely, and remember that first chart, 68% of our economy is consumer spending. So when that gets tamped down a little bit, it's going to have an impact across all sectors out there. Despite worsening sentiment, however, consumer spending has remained relatively stable so far. That's what Dan was pointing out on the Rockdale speedometers. Yeah, because what's happening is it's kind of two different things. Consumer sentiment is getting a little cloudy, a little gray out there. However, consumers are still maintaining their spending levels. Now, it does seem to be shifting between, I guess, income classes. The higher income individuals in our society are continuing to spend at higher rates, whereas those of us that are down, at the lower end on the income levels are feeling that pinch a little bit more of the higher gas prices, inflation, that kind of thing. So that spending is backed off. But overall, consumer spending is still staying relatively stable, and
the number is within the proper amount to show the spending. It's just who is spending it is the big, not mystery. It's not a mystery at all.
Yeah,
it's just who has it spending it.
Well, that's it.
But when that group falls out,
well, it's true. And I mean, even the economists warn, a prolonged pessimism could eventually slow economic growth. So the longer this consumer sentiment level persists, and people just, even if they are spending right now, they're going to start thinking in the back of their minds as the months go by.
Can I do this?
Exactly. So
let's
something to keep an eye on, definitely. Prolonged higher oil prices definitely slow growth. And with the war in Iran, as long as the Straits of Hormuz are shut, our country is somewhat insulated because we are a net oil exporter, so we don't rely on oil imports coming through the Strait of Hormuz as significantly as some of our allies do. Japan, South Korea especially. But again, it's important because, remember, we're all connected. It's that international economy too. But just higher oil prices, definitely, they act almost like a tax on consumers, and they create a meaningful drag on growth if they're sustained. So the longer this goes on, the more we're going to be concerned about our spending levels and can we maintain them. And so this is what Dan and I are watching now. This is looking down the road to see how things shake out here.
And then also I like to say, I say this a lot, but follow the numbers, follow the research, and stay invested. I don't think we're trying to deliver a doom and gloom here. It's just, it's getting a little long in the tooth.
Well, that's a very good point, because this isn't doom and gloom. Remember, we're trying to look what's next down the road, and I'm just trying to share with everyone, what are the things to watch for? When maybe do we need to start, being a little more cautious? And you'll start to see that as consumer sentiment, as things persist, inflation remains high, the war in Iran possibly, continues on. You'll start to see that, and then there'll be more of a concern. But right now, because of corporate earnings, we're still setting all-time records on the financial markets.
Fully invested, moving right along.
yes.
It's just pay attention and look for the
That's right.
higher ground.
That's right. And what to look for, too. Yeah, jobs cool, spending holds. Jobs have fallen off a little bit. Monthly jobs, we need to watch the labor market. Right now, it's fairly steady. In fact, just this morning as we're recording this, ADP came out. Now, it's private employers out there. So this isn't coming from the government. This isn't a statistic. It's a private company. Yeah, it gives us a good indication of where the government numbers that are released later this week ultimately may fall. And they're showing an actual increase in hiring over the last month. So that's a positive sign. Consumers slowing, not stalling, despite the weak sentiment. So again, not an alarm bell that we're raising, but these are the things to keep an eye on. And if we do see that the consumer sentiment stays pessimistic and the spending starts to follow that, then that could be a difficult thing for even strong corporate earnings to power through. Let's see here. Yeah, this is one of the positives here. Business and investments in artificial intelligence are driving growth. It's very top heavy. There's a lot of very large tech companies out there that are bringing in revenue hand over fist, and they're turning around and they're reinvesting that. So one of the benefits we are seeing, it was interesting, I think it was probably the end of last week, but Caterpillar, a company that we've all heard of, they make large construction machinery. They had record earnings and their growth was phenomenal. And the reason is because we think of data centers, artificial intelligence requires data centers, and we think of the fiber optic cable and the computer units that go in these data centers. However, they need to be built. And the construction right now, we're at the stage where these data centers, as they're being built, there's huge demand for construction equipment. So
this is exactly what we talk about buying around.
Yes.
Because we talked a couple of weeks ago about, when you went to Alaska to prospect for gold, you had to buy your horse, your pick, your water, right? Well, now we're prospecting for data centers, and what do you need? You need your heavy equipment, your Caterpillars and stuff like that to build these places.
Yeah.
And they're getting paid no matter what.
They are, exactly.
So, that's a great example of buying around.
Yeah. And
Did I go forward or backwards here?
No, we're good. Lost. This is good.
I got lost in my arrows. I got it left, right.
No, this is right, though, but we're good here. So, what's next, really? Sharp declines in consumer sentiment often coincided with markets pricing in worst-case scenarios, which then create attractive investment opportunities. So, again, as Dan pointed out, not all gloom and doom. You're staying invested. Right now, we're being rewarded. The financial markets are all performing well. There's some indications that consumer sentiment and possibly consumer spending might start to tail off, which could be a warning bell. However, this was kind of an interesting chart I found, that 1-year returns in the S&P 500. So again, an all-stock index, but this was after consumer sentiment bottomed. And then we were able to maintain some pretty significant gains. And again, the reason is because consumer sentiment, we watch the news every night. We hear how the war's progressing in Iran. We hear about the Strait of Hormuz being closed. We hear about, how inflation is running rampant and everything.
It's coming at you 24/7.
Yeah, and it's in our sentiment, that preys on our sentiment, and we start to get concerned about that. However, again, going on behind the scenes, that artificial intelligence boom across many sectors and corporate earnings are increasing. That could be enough. Hopefully it's enough to continue to power through and keep pushing us to all-time highs here. Yep, I think, and that's it.
Here we are. Look, we're back on my slide.
Yes, that's right.
What is old is new again. So I want to thank everybody, and as Jeff has said, this isn't a doom and gloom, but we're seeing good. We're seeing good things.
Right.
But that consumer sentiment and consumer spending, we want to keep an eye on.
Definitely.
Labor market is good.
Yeah.
It's hanging in there. Just keep focus. What's the big saying you always have? It's the time.
Time in the markets, not timing the markets.
And we are getting rewarded for that right now.
That's correct.
So I want to thank everybody for joining us. Have a fantastic May as we slide into our summer here. And I know in Buffalo, every weekend is cherished.
That's right.
It's something to try and get people together. Everything's already booked up. So enjoy your time and enjoy the summer. If you have any questions, we're always here for you. Give us a ring. Thank you very much.
Thank you.